Get Rich Slow with John Wolf. Hey, I just want to give you a quick update on the zero down programs. I also want to tell you a little bit about more shakeup in the industry, and we'll take a quick look at how the bond market's doing. So I'm a loan officer in Oregon and Washington, John Wolf. Here's my license information and contact page. Okay, so lots of interesting stuff going on in the mortgage industry in general. So it sounds like jumbo loans from almost every company are suspended for the time being. Wells Fargo, who is definitely the largest provider, and they actually provide jumbo loans through many companies, including mine, has ceased offering jumbo loans. And it seems like just about everyone else is doing the same thing in that market. So for the time being, only conforming loans are going to be happening for the most part. It might be possible to get a jumbo directly from Fargo, but good luck with that. Anyways, as far as the government loans are going, it does seem like there are many of the companies are not going to be doing government loans at all for the time being. I definitely know I have two on my docket that I'm doing because of that right now. And it seems like every day to every other day, a new overlay is being added by either the investor or by the insurer, which is like USDA, FHA, VA. However, we're actually expecting to get some relief from the insurers. Just for an example, there are some rules that aren't exactly going to work. The investors just insisted that within 3 days of closing, the originator has to call the employer and get verification right then. And then also ask if any changes to the person's hour have happened. And if they have, you have to recalculate that. But the current rules for recalculating that, at least as I understand them for most of those programs, are if there wasn't a full pay stub, you have to wait for a full pay stub. And that's not going to be tenable for most instances. And honestly, I'm grabbing that rule for what's written about temporary disability. There isn't really a rule about temporary work stoppage in most of these programs. The zero down programs largely are getting totally canceled. And the big exception to that is actually that Washington zero down program I've been telling you guys about. I locked somebody into this program at 3% interest flat yesterday. As far as the other zero down programs, it looks like there was a zero down option in Oregon. It wasn't done by the state of Oregon. It was actually offered in many states as a conventional zero down. It seems like Freddie Mac has just pulled out of the program entirely. So my understanding is if you had a loan that was even locked in and going to close in a few days, I believe they suspended that program on Wednesday. So your loan just isn't going to happen unless you can come with a down payment, it's really unfortunate to leave people holding the bags like that. This is an unprecedented time, but I hate the fact that rule changes are happening and being applied to loans that are not only pre-underwritten, but loans that are already locked or have the underwriting done. So even when everything's done, you're going to close in 2 days, rule changes are starting to roll, which can prevent you from closing a loan that's perfectly good and you should have been able to close. That's really unfortunate, but that's not every program, and that's not you're not necessarily going to get caught in that circumstance. But it's super frustrating because I like certainty from my clients. I really like to be able to analyze a situation, see the rule book, and be like, yes, this is going to work. Yes, this isn't going to work. But it's just impossible when the rules are literally changing on you, even when you follow the normal rules, such as if you have an automated approval, you can just go forward with that rule set. Or if you have a lock, you can just go forward with that rule set. Those things are getting broken. Now, to be clear, my company isn't breaking any locks, but if a rule change happens that's effective immediately and applies to loans that are already in process, like there's not a lot that can be done. And some of that's investor level. What I'm really hoping, and the one big piece of help that the government regulators could do to help home sales continue to go on and make things easier on the lending companies would be to get rid of the rule for Govy loans where if a client somehow misses the first payment, then the entire loan has to be bought back at great expense to the lending company. I mean, a lot of companies can only afford a few of them. Like a small brokerage could maybe afford one of those ever in a year. And this year, when it rains, it pours. Anyways, it sounds like we're having terrible jobs numbers. I think I just heard that in the last few weeks together, 10 million people filed unemployments. Now, a lot of those people, thank God, are on temporary furloughs. So the minute that we are allowed to go back to work by our governors, hopefully that will be all those people will be off and running. But I don't know how long these temporary things will just become permanent because businesses will fail. It's kind of scary. Anyways, here's the mortgage-backed securities market. Again, this was the last good day to lock, and pricing does not track with this change. And it especially doesn't track with this change when we compare like the rule changes and how many loans are actually getting approved from this date to this date. Anyways, if you have any questions, if there's anything you'd like to specifically ask about, please put it in the comments. I'm John Wolf. Like, share, and subscribe. Have an awesome day.